All right, welcome back to Market Day Report. I'm Scott Shelly, otherwise known as the Cow Guy. Thank you very much for joining us. And if you've been with us, you're going to have to stay with us another 45 minutes because at 1 o'clock, at the top of the hour, Cow Guy close, right? So I'd love to see you there. We talk about everything we've talked about in this program and go into a deeper dive. So there's lots to talk about. You know that. We got the CPI number today. So let's talk about our markets. How about these corn markets? These markets are your money, so let's dive right in, right? Let's not waste any more time. 11.25 cents higher in the May. 7.75 3/4 is last. That's not bad. 12 cents higher in D's. Look at that. 7.30 for new crop D's corn. Who would have thunk it, right? Wow. Okay. How about soybeans? Yesterday we had a rough day. Today better. 12 cents higher in the May. 16.67 1/4. We got 19 cents higher in that Novi new crop. 15.04 3/4. Look at that. 15.05 even now. Boy, oh boy. That's another good green on the screen crop for you there too. Let's see about wheat in Chicago. If you're a producer, you like these, don't you? 22 cents higher in the May at 11.03 1/4. We've also got go out even out to the D's. You get 21 cents higher, so only a penny loss behind the May. But D's is up 21 cents to 11.02 1/4. So slight bull spreading going on there. How about hard red wheat? Kansas City, 22 1/4 cents higher in the front May, 11.63 3/4. Got a 21 cent gain out in the March of 23, 11.57 1/2. So that's a pretty good curve going out the deferreds, if you ask me. How about spring wheat in Minneapolis? 14 cents higher in the May, 11.56 even as last. Deese is up 14 1/4 cents to 11.31 1/4. And then finally, cotton. How about this one? Cotton's up here we go, 332 points in the May to 138.61, while the Deese is up 235, 232 now to 119.94. Let's get to our next guest analyst. He's with Zaner Ag Hedge. His name is Ted Seifried. Ted, thanks for joining the show. Well, we got some inflation numbers out today, and it seems as though the inflation play is on. What do you think?
Yeah, inflation play is definitely on. Welcome to Turnaround Tuesday for crude oil, for soybeans, for lots of things. 8.5% PPI. Wow. We've been talking about it, and you and I have discussed it, that the inflationary situation is not over. The Fed is going to fight it, but when the Fed starts fighting it, at least initially, that's going to increase inflation. And I think we're going to see these inflationary climates stick around at least until midsummer. We'll see what happens as we get into fall and winter. There's so many question marks as what's happening with the world economy and what's going on with the China lockdowns. To me, that seems like it might be something other than COVID. So lots of things, lots of question marks between now and the end of the calendar year, right? Lots of question marks between now and the end of the calendar year, but at least from the near term, I think that we can see this inflationary bubble continuing to inflate between now and I'd say the middle of the summer. That being said, other news that we had today is that the Biden administration is expected to announce that we are able to use E15 for the summer, which is good. And that's supportive for corn. Obviously, it's not a bad thing. And you showed earlier, corn's up, 11, 12 cents. The question is really how much more demand are we going to get from that? Because we had been putting the infrastructure in place to be able to use E15 year round when the EPA approved it. But then it got struck down by the Supreme Court, and we kind of stopped doing that. So what do we have from an infrastructure perspective as far as E15 pumps to go out there and make that change? I don't know. I'd like to see that infrastructure get put in place because of this, because then it'll be harder to take it back away. So that'd be great to see. It remains to be seen. I don't know if we can get terribly excited about it, but it's certainly not a bearish thing. And look at crude oil. Crude oil likes it too, because what does that mean? If the Biden administration is right about lowering prices at the pump by 10 to 15 cents, well, that just means more demand. Right. So crude likes that as well. And like you said, the inflation plays back on. So lots of good things going on. I really think we have quite a bullish story for corn, and we're just adding more fuel to the fire, pun absolutely intended.
Right.
And then the soybean story certainly hasn't gotten bearish. Let's just say that.
All right. We're going to go away, pay some bills, come back and pick you up where you left off after these messages with Ted Seifried from Zaner Ag Hedge. All right. Welcome back to Market Day Report. I'm Scott Shelly, otherwise known as the Cow Guy. Let's take a look at these cow prices. How about live cattle? What's that doing in Chicago? We're up $1.52 in that front month, April. 140.05 is last. June's up $1.42 to 136.25. Not bad going when you talk about live cattle there. How about the feeders? Look at this. They're all above water here. $1.15 higher in April at 157.80. We're up $1.12 in May to 161.02. But even out the deferreds were higher on the day out to October. So that's good in the face of higher corn, isn't it? How about lean hogs? This one's strong. $3.42 higher in that May to 112.42. June up 3.45 as well to 118.47. And July up the same, basically 3.42 to 119.82. So some good buying when it comes to lean hogs there as well. Let's bring back in Ted Seifried from Zaner Ag Hedge. Ted, what do you think? What do these livestock markets do to you?
Well, like you said, I mean, it's a good day when you've got corn higher by double digits and also cattle and feeders higher. And we're bull spreading in feeder and live cattle. So that's really nice to see. It really goes to the point of, the risk on or inflation on trade that we're seeing today kind of across the board. But also, I think domestic demand is going to be really good for spring and summer grilling season, which we're just now starting to get into. There have been some doubters because of high prices of energies and thinking maybe we're going to spend more at the pump and less at the grocer. But I think those doubters are going to be surprised. I'm really optimistic for our domestic demand. And then you look at the hogs. That's the big ticket winner in the livestock today. We spent the last 4 days really kind of carving out this near-term low and trying to probe and break out to the downside unsuccessfully. Now you have this sort of technical breakout on the chart, which really looks good. It seems to me that hogs might want to go back up and test those recent highs. Again, there too, I think that the domestic demand is going to surprise some people here as we get into the grilling season.
Right, and depending on what the economy does, and it looks as though they're going to let inflation, they're not going to let it. They're going to try to fight it, but it'll still be around until, say, even the end of the year. I think they're projecting 6.5%. So that doesn't look like they're going to crush anything.
Worse before it gets better.
Right, yeah. So it looks like it'll more of the same, MOTS, as they say. All right, I really appreciate that. Ted Seifried from Zaner Ag Hedge. He's in Chicago. I'm going to bring it back here to Nashville so I can throw this over to Janet.